trading is absolutely ridiculously boring. If you're having fun trading, you're not doing it right. The only fun in trading is making money.
Hello, everyone. Welcome back to Paradigm Press on YouTube. Today, I am joined by my good friend and colleague, Alan Knuckman, who is the co-author of The Profits Wire and also co-owner of Bullseye Options, and has taught me a lot about options in the short time I've known him. Of course, my name is Sean Ring. I am the editor of The Rude Awakening, and all the option stuff you ever see in The Rude comes from my dear friend, Alan. Alan, thanks for joining us today.
Thank you. If you notice the theme there, options are a better way to trade. So we'll talk about that here in this next half hour and why there's so many advantages to it.
You're on a trading floor, it looks like, at the CBOE. Can you tell us a little bit about that?
Sure thing. And that's a story of evolution, and that's a story of technology, going from floor trading, which over my shoulder is not as much fun as you think it is. And so a lot of these trading floors have gone away because the markets are so efficient now, and we'll talk about that. But this trading floor is still here for a number of reasons. But number one reason is for visibility, so that, you know, when TV crews come by, CNBC, Fox Business, whoever, I'm on all these shows. And first thing I'll tell you is don't watch TV. TV doesn't do you any good. There's nothing anybody's going to say, with the exception of me, maybe, of what specifically to buy or sell. They're just out there talk, right? And you understand that TV is there so to get you very excited and emotionally invested so that you'll continue to watch. So the TV is there to sell advertising time, not to help you make money. But anyways, this trading floor is to give the CBOE visibility, and there are still traders on the floor that do complicated spreads, and the markets aren't there just yet. If they're doing four-legged spreads or rollovers, that the markets aren't there for options just yet as far as the computer goes. So it still needs to go through a person, and that's what these guys are for. But like I said, it's not as much fun as you think it is.
No, I was way too short. I'm very glad that I missed those days on the floor. I didn't have sharp enough elbows for that.
That's why I got hired. That's the first question you're going to ask, is why I got hired, how I got started in this business. I got hired off the street because I was tall. And that is honestly the thing. And my best friends will not let me forget that. I'm not extremely tall. I'm like 6'3", but still in a trading pit, they need you to be seen. And so my friends always say that I'm not smart. I was just vertically gifted.
Well, I don't know. I think being called tall is a better insult than being called short and fat. And both. Right. But anyway.
Okay.
There you go. But going back to your beginnings, I wanted to ask you about that because you mentioned this in passing once. You talked about, you understand the markets partially because your dad was a psychologist, and this clearly has an influence on trading. I mean, without going too deep or too crazy, I'd love to hear about it.
We don't want to get into psychology with my dad. He's professional and he is what he is. But sometimes, you fall a different direction from the tree. And that's what happened with me. I became very focused on finance and money. Now, when I was a kid, there was no formal education for trading. And nowadays, there isn't either. You just had to learn by doing it. So after college, I moved to Chicago, and I thought I was going to be in advertising, and I was going to get hired by Leo Burnett. The Gulf War started. So that tells you how I'm an old, grizzled trader. All right. Hopefully, I don't look like it, but I am an old, grizzled trader. Been here for 30-some years. So they weren't hiring, so I would go down to the exchange because I was just fascinated by that. Like I said, hanging out at the exchange, after a couple of days, someone came up to me and said, "Hey, do you want a job?" And I'm like, "Well, I don't know anything about this." But the idea at the time was you could be, a Harvard guy, or you could be a guy from the South Side of Chicago that never finished high school. It's a different skill set. And unfortunately, most of those guys that learned that, and there used to be 10,000 guys here, 10,000. And so that skill set doesn't really translate to anything. Zero. That is not anything you could take to another job. So these guys had to find other careers, but there were a few that kind of evolved and learned how to trade on a computer and learned how to move forward. This trading is not about trading, and we're going to talk about that. These guys aren't actually trading. What they're doing is they're making markets, and they're trying to make an edge. So all they're trying to do is make one tick. When I traded into Treasury bonds, it was $31.25. All right, you try and do that over and over and over and over again. Buy at the bid, sell at the offer, buy at the bid, because that's what you can do on the trading floor. Now you can't do that, and now the spreads are wide. the spreads in stocks used to be 12.5 cents and 25 cents. 25 cents between the price you could buy and the price you could sell. Now it's in millipennies, and people complain about order flow nonsense. I'm like, just shush. I don't want to hear it.
Yeah.
So anyway, so I took that, ran with it, started as a runner, bottom of the base, and making $2.35 an hour, working 30 hours a week. You know, you learn the business and moved up, and I've never looked back. I've never had a real job since, because I love opportunity, and there is no opportunity like what you see in these markets. The markets right now, even better than when I was a kid, they're the best markets in history, because you can take advantage of unlimited opportunities, up, down, sideways, any market, any direction, any time frame. When I was a kid, if you were whatever pit you were in, you know, there wasn't a whole, if there wasn't something moving, what do? You know, you can't go to another pit because there's other guys over there that'll punch you right in the neck. So, you know, you either forced to trade. I would often spend a lot of my afternoons at Wrigley Field, because if there wasn't something happening, I'm better off. I'm making money. I'm saving money by not being in the pit. But now, if you missed an opportunity back then, you regretted it. Now, there's something now, there's something 10 seconds from now, there's something a minute from now, a month from now. There's always opportunities, unlimited opportunities. This is the best time in history.
But it's funny that you mentioned that, because you are so optimistic. And my old boss, who was another 6'3" guy from Chicago, who, you know, he used to trade gold. You know, he'd buy it in Chicago, sell it in Zurich at $3 spreads. Okay. And, you know, that's why he had his mansion. But, you know, he also was extremely optimistic. And I was just wondering, because, you know, we always joke around, because most of Paradigm Riders are kind of pessimistic about the world. We bought into John, kind of. We bought into Galbraith's pessimism is the mark of true intelligence, you know, BS. Right. But, you know, how does staying optimistic help you find trades? Is it something about mindset there?
Well, I think in this psychology a lot is I always recognize opportunity. Number one. Number two is you guys think too much. Okay. I don't think at all. Opinions are dangerous. I trade what I see. I trade what the markets give me. You know what? If I have a deep-rooted opinion, I'm going to get myself in big trouble. Big trouble. The markets are going to do what the markets are going to do. The markets don't care if you're Republican, independent, you know, Democrat, libertarian, whatever. They don't care about anything. The markets are going to do what the markets are going to do. And if you use the word should, you know, every time you use the word should, you need to take a $100 bill and light it on fire. Just light it on fire, because should means nothing. Should and you know, and hope. I hope something happens. Neither one of those are trading plans. Neither one are trading plans. So to get back to psychology, yeah, I am optimistic. I grew up in a mining town. I understand commodities. You know, I understand cycles. I understand boom and bust. You know, and I understand what that does. And you know, and my goal was, if you look at my hands, very smooth. All right. My goal was not to have to work in the mines or on the railroad like everybody, like my grandfather did. And so, not that there's anything wrong with that. I mean, they're hard workers. But like I said, my goal is not to work hard, to work smart. And that's what I've done for 30 some years.
That's brilliant. And you know, the method you use employs options instead of stocks. I wanted to ask you about that. I mean, one, why do you do that? And two, do you feel that newbies also should trade options instead of stocks?
Yes, absolutely. Yes. Okay, now options have a bad, you know, reputation, because, and actually it got better and worse because of what these, you know, trading bros did. Okay, options are an amazing vehicle. Options, you have so many advantages, and the advantages are all masked. For me, it's trading is boring. Okay, I'm hopefully a little bit energetic and exciting, but trading is absolutely ridiculously boring. If you're having fun trading, you're not doing it right. The only fun in trading is making money. Okay, trading is methodical and boring. Identify, execute, manage, maximize, and then repeat. And it doesn't matter what time frame you're looking at. I don't care if you're a floor trader like these guys, or a trader that trades swing trader, I am actually an anti-trader. I do not consider myself, and none of these guys would ever consider me a trader. Okay, I get into positions, we'll talk about it, and I'm holding positions for 3 to 6 months. Okay. I'm using options as a vehicle because it has so many advantages. So I'm not getting in and getting out. That is absolutely no fun. Anybody that's tried that, good luck to them. All right, getting chained to your computer, worrying about every tick and burp on TV and anything anybody says, the market moves. That is no fun. That will make you lose your hair. So
broker, yeah.
I'm not saying anything. I'm just saying I'll make you lose your hair. So what I needed to do for my own self and my own personality is figure out a way to extend that. Okay. So you can extend that, as a swing trader, trading bigger, trading longer positions. But the best way for me to do it, and the best way that I found, and to turn the light bulb on for most people, is to use options, use in the money options. Now, the bro traders, the reason that they made money in that, in all those meme stocks, because they're talking about stocks that have crazy moves, and they were buying the most long shot. We call them, how shall I say politely? They're lottery tickets. Lottery tickets. Okay, they're not even lottery tickets. They're lottery tickets on top of lottery tickets. Okay, the probability of those things being successful is like 1 or 2%. Now, every once in a while, something happened. These guys did okay. But what they did was they bought too little time, as options people usually do, and they bought too far out of the money. Meaning the probability of those being in the money at expiration were essentially zero. Okay, sometimes they came through, but they did raise awareness to the leverage possibilities of options. Now, leverage is a good thing if used properly. So what I do is I buy in the money options, the stupidest, ridiculous, most simple strategy known to man. Instead of buying a stock, I'll buy an in the money option that acts like a stock. If the stock's trading at 50, I'll buy a 45 call, which gives me the right to be long from 45, at a discount to where the stock is trading, and I'll buy myself some time. So I've taken the disadvantages, I've turned them into advantages. And like I said 100 times, it's a better way to trade because a small move in the option produces a big, big gain. A small move in the stock produces a big, big gain in the option. A 5% move in the stock produces a 50% gain in the option. A 10% move in the stock produces a 100% gain. So it's just math. And the best part is my options have probability of 75 to 80% of success rate because they're in the money. So we'll get into that, but it's ridiculously simple. And as soon as people make that, analysis, then they get it and they're off to the races. There's no reason to trade a stock itself except for the dividend. Okay. There's no reason. There's a better option strategy 99.9% of the time.
I think, it's amazing you're talking about in the money versus out of the money options. Do you need to learn Greek to trade options?
No, that's all I know. That's all I know. Okay, I have made this, and I'm the idiot. I've made this idiot group, okay? So these guys right here, if I go to the parking garage, Ferraris, Porsche, Lamborghinis, I mean the craziest of crazy cars, right? And they're where they drive it to their crazy houses. Now, these guys made their money by selling those lottery tickets to people. They sell the out of the money options that expire next week. And you know what? They collect the premium. And they do that again the week after, and the week after that, and the week after that. Because the novice trader, when they learn options, they buy the low probability options. I've flipped that. I'm not selling them. That's a whole different game. I am going and saying, okay, listen, pick a stock. What stock? Tell me a stock you hate right now. A stock less than $100, let's just say.
Oh, God. Right now, I hate something like Frontline, They're terrible, but...
All right, FRO. So, okay, FRO, where's it trading at?
I think it's trading about $18 right now.
If I can put it, you could put in a limit order if you wanted to buy it, which you don't want to buy. But let's say you're on the, you think that, maybe the stock come back. You could put in an order to buy the stock at 10, right? Next time it goes down and hits the lows. Or you could buy the $10 call, which is $8 in the money right now. It's probably trading for about $8.50. So you've got the right to be long from $10, and you could buy a January option, and you have 4 months of time for something good to happen. But what's the worst case scenario? You're long from $10. That's not a scary thing to me. Ideally, I'd probably buy the $15 call, which is in the money, but not something deep. But I'm buying the stock I have the right to buy the stock at a lower level with limited risk. Your options have risk built in. because the worst thing that can happen in an option is go to zero. No matter what happens to that company, if that company blows up tomorrow, the worst thing that happens is that option goes to zero. So if you buy a 15 call, which is still dramatically lower than where we are right now, dramatically lower, you buy a 15 call and you pay $4 for it, $400 is your maximum risk. But you have the right to be logged from 15. So, it's just math. Math.
Right. Okay, I like that a lot. Now, and again, just to nail this thing down about in the money versus out of the money options. I mean, out of the money options and at the money options, Ceritus paribus, all else being equal, are cheaper than the in the monies. But you're opting for the more expensive. Is that because the odds are in favor? Is that why you're doing that?
Yes, it's all math. It's all probability. And that's the only Greek we're going to talk about today. And that is the probability, which is equivalent to the delta. So I look at a delta of 70 to 75 because it's going to act like the stock. It's called a stock substitution strategy. It's going to act like a stock at the fraction of the cost. So if you wanted to buy 100 shares, it's going to cost you $1,800 in that example. That option that we're buying, the 15 call is probably at about $400, if not even more than that. So you're getting 100 shares for a quarter of what you're paying, but you're getting the same upside, and you're actually getting a multiplier of that, because if it goes from 18 to 25, that's a $7 move, then that option's going to get, that option's going to more than double in value. So, it's about math. It's using the right vehicle, using options because of the right vehicle. Now, again, it's all based upon your analysis. You still have to be right in the direction of the market. Is the market going up, down, or sideways? But you have a much more efficient vehicle that's going to give you a much greater payoff, and it's going to allow you, and I'm going to throw this out here, lose no sleep options. Okay, I live a great life because I use in the money options with plenty of time. I am not worried about the nonsense going on behind me. All right, I am not worried because I am using what I call lifestyle options. They fit my lifestyle. They're 3 to 6 months. They're in the money. I'm not sweating it. And I get great payoffs if the markets move my direction. And that's where I use my tools, my instincts and my indicators to put the probability on my side, even though I've got the probability on my side with the right option.
Okay, but that's awesome, and that's such valuable information. Can someone who has, let's say, starting capital of $1,000 or less, can they participate in this as well?
Oh, sure, because there's options like the option I just showed you is $400. Now, obviously, you're a little bit hamstringed with starting that small, but you're probably better off than starting with $1,000 and buying shares of stock. How many shares of that stock you could buy? You couldn't even buy 100 shares in that example, right? So for each option, you're controlling 100 shares. And like I said, if you're buying an in-the-money option with some time, it gives you that leverage, that positive leverage in a good way with limited risk. And for a trader, the number one thing a trader needs to think about is about anything else. What is my risk? What is my risk and what is my impact on my account with this particular trade? All right. And it's not about any one trade. I hate gambling. Gambling to me is stupid. All right. Because the odds are not, you can get 51% odds, right? If you're play perfect blackjack, 51%. Nowhere else can you get that, right? Maybe you can play craps, and I got math guys behind me that play craps, and they're pretty good, but it's still, that's a lot more work that I want. So what I'm saying here is that I want odds on my side. And that's what this allows me to do in the marketplace, because gambling's not the place to go. I don't go all in on any one trade. One trade is just a series of events. Okay? Identify, execute, manage, maximize, repeat. With high probability, be successful over the course of a month, course of 6 months, course of a year, course of a decade. And it's all repeatable. Okay? And that's where psychology comes in. You gotta manage yourself psychologically, because that's the biggest challenge in trading is psychology. It's not making money. Everybody can make money, but can you keep money? And can you, intelligently exit, take profits? We'll get into that in a second. But as far as going back to gambling, this is not Texas Hold'em, all right? And it's a series of positive events over time. And with a small account, what I would recommend is, ideally a $10,000 account, and you divide each trade into equal dollar amounts. So you divide your account into 20. So every trade is a $500 trade. You're risking $500. So no one trade is going to have a catastrophic impact on you. If you let one trade mess with you financially, it will mess with you mentally, and it'll be very challenging to be successful.
Right. And you just mentioned there $10,000, 500 per trade. That's roughly 20 trades on the maximum that you could have on. How many do you usually, just ballpark figure, do you have on at any one time?
As far as my profit wire service, probably 10 to 15. I've got very specific parameters of when to exit, and I sell too soon. Sell too soon. That's a rule to use. All right. Sell too soon. Any money you make is more money than you had. Now, I'm going to be teaching in Las Vegas. And I'll be at our symposium. And one thing I'm going to teach is how to trade. Okay, how to trade. Number one, learn to lose. Taking a loss does not make you a loser. Learn to lose. Okay, a loss is much better. Getting out and taking a loss is much better than not getting out and then hoping it's going to come back. We talked hope is not a strategy. Number two, learn to break even. Okay, that's what they teach on the trading floor. Learn to scratch a trade. If you buy at the bid and you don't get the edge, sell back at the bid. I didn't make any money, but I took a swing, right? So we talked about risk control. Risk control is critical. You need to know what your maximum risk is on any trade and how it's going to impact your portfolio, so you have money to trade another day. They always say trade for tomorrow. Okay, so and then number three is learn to make money. Learn to make $10. Learn to make $100. Learn to make $1,000. Just learn how to add a zero. So it's simple when you put it that way. Okay. And sell too soon. Like I said, with our profit wire service, I've got an exit at 50%, sell half of our positions at 50%. I recommend people trade in pairs. That way you've got money management flexibility. Sell one if you get a 50% gain, then sell the second one at 100% gain. And because that can happen easily in the money options. And you know what? If you leave money on the table, if you're not happy with 100%, we got a whole nother conversation. If you want to be bigger than that, you could trade in threes, sell one at 50%, sell one at 100%, and then hold that last one at C. Because we've seen some exponential gains where options have gained, 300%, 400%, 500%, and you left money on the table. But you know what? I'm a big boy. I've done this over and over again. I'd rather take my 100% and look for new opportunities because, again, to get back into this, there's opportunities every moment of every day. It's not about being a hero with any one trade and say, oh, I bought Tesla here and bought it at the low and sell at the high. That's not what it's all about. It's about consistently making money with high probability, with limited risk, and having a plan. And that's what we do.
Awesome. So for people who are new to this and have been watching the world, seemingly be set on fire, you're saying to them, with a little bit of capital and a whole lot of patience and trading options,
okay,
there's a way to navigate this.
You think the world is on fire, right?
I don't think so. Perhaps
okay, but I'm just asking. Okay,
Schrodinger's fire.
What is the market? Tell me what the market thinks in 2023.
The market's been performing very well, of course.
Okay, so very well. The Nasdaq's 50% off its lows. That's very well for you.
Very well.
Okay, the market doesn't think what you think. Okay, the market thinks on its own. So guess what? There's been a lot of money made not thinking that way. So, hey, I just trade what I see. And my indicator that I use with my partner in London that we use is a money flow indicator. And it measures the money flow in options. The idea is that if somebody knows something or someone that's smart, Goldman Sachs, Morgan Stanley, if they're buying 10,000 options, they probably have a good, a good basis of thought for that. Okay.
Yeah.
So somebody's buying 10,000 options, and number one, they're buying options because they don't have to file a 13F, and they can 10,000 options. Look at how many shares that controls. Okay. So look at that investment. It's huge. So we follow the money. That's it. We follow the money. We use technical analysis, and we use the right options, not necessarily the option that they're doing. But this is more than just unusual option volume. This is our indicator has this money flow indicator gives us context, and it's kind of like a code breaker. And the fact is, why did they buy those 10,000 options? Were they covering a position they had? Were they writing a covered call? Were they, using these options as a way to sell, as a way to get into the stock lower, like Warren Buffett does? But my indicator, filters all that out and lets me know. So if someone's building a leverage position, that's probably a good thing to follow. We've seen this over and over again. Just 2 weeks ago in Intel, we gained 50% in 3 days, and then we gained 100% in 2 weeks in the second half. Now, that's not typical. Typically, we hold our positions for 70 days. So you don't have to watch the markets minute by minute. You check in on your positions on a weekly basis, and it's about percentages. It's about probability and percentages. And a $4 option, guess what? Only has to get to 6 to gain 50%. So again, I'm not looking to light the world on fire. I'm looking to take advantage of this and math and probability, and that's it.
That's fantastic. That is extremely interesting. And before we go, I'm going to leave this to you. I'm going to let you sell you. Where can everybody find you, Alan, when they're looking for this great options information?
ProfitWire. ProfitWire is our service with Paradigm, and this particular service has been with Paradigm here. It launched in 2019, so that's 4 years. 4 years. Bull market, COVID market, bounce back market, 2022 market, and now rally market, right?
Yep.
There's always opportunities, and you're going to say, well, Alan, you're always bullish. I am old. I don't like to play the short side anymore. The short side is hard for me because it requires more attention. Sell-offs are often short-lived. And if you don't grab the money right away, it melts in your hands and it's gone, right?
Yeah.
So I play the long side. And guess what? There's always bull markets in everything. Everything. You know, there's a bull market somewhere, sometime in everything. And that's the way I trade.
Well, that is absolutely brilliant. Alan, thank you so much for joining me today. I had a great time. And folks,
well, thank you.
Do pick up the ProfitWire.
Learn to trade a better way. Okay. Don't be afraid. Buy one option and see how it moves. And you know what? You're going to come back and say, you know what? This thing is like watching paint dry. This is so boring. This is going to kill me. Okay. This is so boring. I can't handle it. Guess what? That's good. That's good. All right. But if a $400 option goes to $600 in the period of 2 months, you'll think boring is good. So understand what this is all about. Be bored. Get out and play golf. What do you do? Every day I see you. You're a professional beer sommelier. But besides that, what's your hobby? You got to have a hobby.
Oh, I read a bunch, and yes, I'm training to be a wine sommelier, although amateur.
You're not even wine. It's always beer with you. Don't try.
That's just for our meetings.
Don't try to be more sophisticated. Don't act sophisticated with me. Don't. I've unclothed in front of you and told you all the secrets and how silly and simplistic what I do is. I could try and be that. I don't want to be that smart guy, okay? I just don't want to be the dumb guy that ignores what the market's telling me. All right? That's it.
There you go. Alan, it's been brilliant. Thank you so much for that.
Thank you.
Have a great one.